The strategic repositioning programme that we started in November 2011 was really about trying to position Segro as a fit-for-purpose 21st century REIT. And that involved us selling off a lot of older non-core industrial property. So we've been selling older multi-let industrial estates in places like Birmingham and Manchester and Bristol and South Wales, and reinvesting a lot of the proceeds into modern warehousing and distribution space, particularly focused on markets like the Midlands Golden Triangle and edge of town urban space for doing last mile delivery to cities like London. And over the last 3 years, we've really achieved all that we set out to do and more. We've sold £1.6 billion worth of property. We've reinvested about £1.3 billion either through development or through acquisition. We finished 2014 in good shape. It's the year in which we substantially completed our portfolio reshaping programme, and the benefits of all that hard work have started to show through, both in terms of the operating metrics and in terms of our NAV. On the operating side, we've reduced our vacancy rate down to 6.3%, which is the lowest we've ever reported. We had a like-for-like growth in net rents of 2.4%. Rents in the UK have increased by 3%, and we've had a tremendous run on development. We completed and delivered 268,000 square metres of new developments, which will contribute about £20 million of new rent when fully leased up. And on the net asset value side, we've had a big uplift in the value of our UK portfolio, which has meant that NAV is up by 23% in the year. There are a number of underlying drivers behind our performance in 2014. The general economic environment has been pretty supportive, with decent economic growth in the UK, at a time when most retailers and third-party logistics operators are trying to reconfigure their supply chains to cope with the extraordinary demand placed on them by internet retailing. At the same time, there's a real shortage of new space available in all of our key markets. So the occupational side of the equation has been pretty attractive. And on the investment side, there's very strong investor appetite for industrial and logistics warehouses at the moment, partly because they see an attractive yield, and partly because of the growth drivers that are coming through. And so we've benefited both from good occupational demand and good investment demand, which has driven our returns this year. Segro has had a good year on the continent, both in terms of growing our own on-balance sheet light industrial and urban distribution products in major cities like Paris, Düsseldorf, Warsaw, but also in growing our big box logistics position. This is our venture that we set up just over a year ago, and it's grown its assets under management now from €1 billion at the end of 2013, €1 billion, to €1.7 billion at the end of 2014. So it's well on the way to achieving the initial growth target we had of achieving €2 billion of assets under management. And we've done that through a combination of some very good acquisitions of modern warehouses in key distribution markets, and also through development of new space for some of our key customers. Segro is well positioned to perform in 2015 and beyond. The occupational market conditions are generally supportive. There's very limited new supply of space available or indeed coming on stream in any of our markets. Rents in some of our markets, particularly in the UK and in the southeast, are strengthening, and I expect that to continue in 2015. And we have a fantastic land bank that is currently already on site producing 240,000 square metres of new space, and I expect we'll add to that during the course of the year. Our confidence in the outlook is reflected in the board's decision to resume our progressive dividend policy, increasing the final dividend payout for this year by 0.3 pence per share. On the investor side, I expect there to be continuing strong demand for industrial and logistics property in 2015 and beyond.